Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
This podcast was recorded for publication on the 19th of June 2025 by HSBC Global Investment Research. Disclosures and disclaimers must be viewed on the link attached to your media player. And remember, you can listen, like, and subscribe wherever you get your podcasts. Just search for Under the Banyan Tree.
Hello from Hong Kong and welcome to Under the Banyan Tree. I'm your host, Herald van der Linde, Head of Asian Equity Strategy here at HSBC. Well, tensions are clearly running high in the Middle East right now, with ripple effects being felt globally, but we're not here to talk politics. I'm joined today by my fellow equity strategist Prerna Garg and Global Head of Transport Research, Parash Jain. We're going to discuss how sensitive Asian markets are to global events and rising oil prices, and take a look at the impact on tankers and container shipping and these sort of things. We'll also try to answer the question, is unpredictability the only thing we can safely predict right now? And if so, how are investors positioned to deal with it? From HSBC's Asian headquarters, you're listening to Under the Banyan Tree. A little context that might be useful before we begin. Tensions between Israel and Iran have sent oil prices above $70 a barrel this week. Iran is, of course, a major oil-producing nation, and recent events have caused, some concern over supply. That is a worry for major economies, including China, which buys a lot of Iranian oil. On top of that, shipping routes can be affected by geopolitical tensions, as companies weigh whether or not it's safe to send their fleets across certain routes. On that note, let's kick off the conversation. Parash and Prerna, welcome.
Thanks, Herald. It's great to be back here.
Yep.
Thanks, Herald.
Good. So, Prerna, I want to kick off with you. Oil prices gone up, gold has gone up a little bit. Actually, bond yields in Asian markets have held up reasonably well until so far. But which markets are most exposed to oil prices?
Herald, if we go purely by numbers and if we look at the historical correlation, in Asia, Taiwan and Korea generally, they have performed well during rising oil prices in the past. And it's India and Indonesia that generally tend to underperform during rising oil prices.
And Indonesia and India are both buyers of oil, right?
They are both buyers. In fact, India is the biggest importer in the world.
Yeah.
So if the oil prices increase, it enlarges the import basket, and it's not really good for the macro of the market.
Yeah. And Malaysia, I think, is a exporter, right?
Malaysia is an interesting case. Malaysia is the only oil exporter in Asia. So ideally, you would expect Malaysian equities or a Malaysian economy to do well because a large part of the government's budget is sponsored by these crude exports. However, from equity perspective, we don't see a very strong correlation between oil prices and oil market. This is because, as you often say, economy is not equity market or equity market is not economy. So yes, high oil prices, high crude prices can be good for Malaysia, but the equity market structure of Malaysia is very different from the economy.
Exactly, it's got banks and
it's
consumer
generally
companies
banks
and
and which are not very sensitive. So in general, we don't see very high sensitivity of Malaysian equities to crude prices.
That's right. And you said you did this by the numbers, and that's also the weakness here, right? Because Korea and Taiwan come up, but that's because they tend to do well if oil prices go up, because the world economy is humming along and people need to open up their factories and they need oil. So higher oil prices is a healthy indicator in that sense, and that's why Korea and Taiwan export.
So it's important to see whether the oil prices are increasing because of high demand or it's coming because of low supply. If oil prices are high because of strong demand, this can be good for export-oriented markets like Korea and Taiwan.
Yeah. What about China? Is it very sensitive to oil?
Before we go on China, there's just one general trend I want to highlight, and that is, in general, the sensitivity of equity markets in Asia to oil prices is coming down over time. And that is because the dependency of the economy is coming down. And that's because of the larger share of renewable. Yeah. So they tend to be the shock absorber.
Yeah. That might explain a little bit why actually Asian markets haven't really done so much.
Yes, so because it's not as sensitive as it used to be in the past. And in mainland China, I think the indirect impact of oil prices is much stronger than the direct impact. And that is how does it impact US dollar?
Yeah.
If increase in uncertainty associated with any escalation in conflict or because of tariff
At
or
least to a
because of
stronger dollar, that's typically bad, right?
which is generally bad for markets like mainland China.
Yeah. So for China, it's really indirect impact,
That's right.
Now, Parash, you always tell me that uncertainty and disruptions is good for the companies that you look at, all the biggest shipping companies. So is that the case again?
Yeah, indeed. I mean, all else being equal, generally the trade of goods flow through the most seamless way. And as and when we see a disruption, whether it's geopolitical or climate related, the normal flow of goods disrupt, which means you need more capacity,
more ships
to handle the same amount of volume. And as a result, you see a reflection on the freight rate.
Yeah, because then these shippers can say, well, if you want my ship, you need to pay a higher price for it, right?
Or in this case, for example, if the oil flow disrupts out of Iran or out of Strait of Hormuz, then naturally that oil needs to be supplied by either US or OPEC, which means that everybody, each of
There's
these
another
countries
tanker
need to
that you
change
need
their
somewhere,
routes.
yeah.
Absolutely.
You make a distinction here between tankers and container shippers, right? Because tankers do oil, container shippers do goods. So this doesn't really impact actually trade flows that much, is it?
Yes and no. I mean, if you see since President Trump came into power and in the last few weeks, the talks that Hamas has agreed not to attack non-Israeli vessels, some of the container shipping lines have indeed started to bring some of their India-Mediterranean service through the Red Sea.
So they went back to the Red Sea. Yeah.
They were thinking, few of them did. But after what has happened over the weekend, probably that will also push ahead by a couple of months.
Because there's just more risk to it, right? But that means they got to go all the way around South Africa again, and that's more costly.
Which is what they are doing now for almost 15, 16 months.
Oh, yeah. So the impact on trade is probably not so big immediately. So.
Not on the container.
Not on the container, that's what I mean, yeah. So
Correct,
if you ship shoes and computers and these sort of things are out, but for oil tankers, it means it's going to be probably good for them for the time being.
Yes, I mean, despite as attractive as the freight rate would be, I mean, some of the ship owners are still hesitant to actually deploy their vessels because you are talking about hundreds of millions of dollars worth of vessels. So I think the insurance companies will pretty much show us the path of how cheap or expensive it is to sail through those routes.
And is it easy to say that if they cut off the Strait of Hormuz, so they could cut off the Gulf, then China is a big buyer of that oil, right? So it ships it, I presume, through the Gulf and Sri Lanka and then through the South China Sea into China, right? Where can they go?
I think there are two things, right? So with respect to Iranian production, I think 1.5 million barrel per day is what they export. And predominantly majority of that export goes to China. If Strait of Hormuz is disrupted, then even a lot of the Middle Eastern countries, oil also flow through Strait of Hormuz.
Yeah.
I don't think the world has seen anything like that since 1970s.
Okay.
So Strait of Hormuz disruption means almost quarter of global oil flow disrupts.
Yeah.
That probably will be quite disruptive.
That will be very disruptive. And is this a serious risk for China that it can't get its Iranian oil maybe anymore?
I mean, Iranian oil in a grand scheme of things is 1.5 million barrel per day. So, I mean, OPEC has a 6 million barrel per day of surplus capacity. But implication on shipping is quite high because today a lot of this Iranian oils goes in a shadow fleet or a dark fleet, as we say. So as soon as the oil flow moves from Iran to, let's say, OPEC, then that oil need to flow through the mainframe lines or mainframe oil tankers, which probably means that there's a more demand for the large vessels like VLCCs compared to the supply.
Okay. But in a sense, size-wise, it means that China could easily say, well, if we can't get access to Iranian oil, we'll just buy it from, say, Brazil or somewhere else, right?
Yes, I mean, if you look back, what happened during the Russia-Ukraine crisis, right? When Europe stopped taking oil from Russia, that oil started to flow to China and India.
Yeah, okay. So we're going to take a very quick break here, and then when we're going to come back, I believe you got a question for me, right?
Sure. Herald, I have a question for you.
Yeah.
I mean, in our world, it seems like you can safely predict the unpredictability.
Yes.
Is that what you're seeing in the market also, that uncertainties become a norm and therefore market is not reacting as wildly as it would have been a couple of years back?
Yeah, I mean, for you, Parash, this is actually positive, right? Because your shipping sector, for a long time, nobody looked at it. And now, with all the uncertainty that we've had over the last 5, 6, 7 years, every time shipping comes back into focus. So it's a very different sort of dynamic for you as an analyst, right? But yeah, we've had a lot of uncertainty. So pandemic, we've had, of course, disruptions in trade flows quite recently. That was the Red Sea you were referring to. Now we have oil, we have had a trade war, and you can go on and on and on. So there seems to be more sort of big events that suddenly hit us. There's maybe a couple of things that are important to understand here. First of all, we might get conditioned to that. You're right. We know that uncertainty is here, so we deal with it as it comes. And we've maybe learned a little bit better to deal with it as well. Secondly, most investors in Asia are relatively defensively positioned. If you look at all the flows that we see in the region, a lot of people look for income-generating equities, so high dividend yield. And those companies that they've invested in, the exposure to, say, higher oil prices is very minimal. So it's the second round effects that Prerna was talking about, right?
And probably these sectors are now much smaller weight in the index than they were in the past.
Exactly. So most of these dividend flows are relatively stable, and therefore people are not so much worried about it. That's the third thing. I also think this comes at a time when Asia is starting to look a little bit better. China clearly has signs of improvements in the property sector. Demand is still weak in China, but at least it seems to try to improve, let's put it like that. Interest rates are high in the region, they're coming down. India, Indonesia, for example. So there's sort of buffers that we've built up. If this would have happened 3 years ago when the Chinese economy was much weaker, then maybe the dynamics would have been very different as well. And that means that the region is maybe a little bit better attuned to this. And if I really go back to, say, my own history, in the 1990s, when I was a junior analyst, I looked at Indonesia, and their banking system was, at that particular point in time, really, really weak. So when you had a wobble in the world, all these Asian banks started to wobble very easily. But now they're really solid. So you have a banking system that's very important, that's much stronger across the region and can deal with these sort of stresses. So, Parash, Prerna, we've covered a lot of ground, looked at it on all sides. Any final thoughts you have on this situation?
I mean, I think we are firmly, predictably unpredictable terrain.
Yeah.
And time will tell what happens and what are the events likely to unfold. But from our perspective, beyond Israel and Iran conflict, we'll take a keen interest to see how the ongoing trade negotiations with the US will play out. Yeah. Well, a lot of deadlines are approaching while we will be in the summer break. Yeah. Whether it's a July 9th, whether it's a August 9th, is it kick the can down the road? So, yes, there will be plenty of things to look at during the summer.
Plenty of unpredictability coming your way.
Absolutely.
Predictable unpredictability, anyway.
And let me use that word again. And given all the unpredictability, I believe that investors would be looking for the so-called hiding spaces where they see more predictability.
Yeah, and I think when you say that, you go back to what is predictable. And there are certain trends in Asia that we know will go on irrespective of what happens with the macro or with oil. For example, Asia continues to age, so we know that consumer demand is going to change. We also know that in India, for example, Indonesia, as people age, that healthcare demand is going to go up. So looking at these longer-term themes such as demographics and development of new technologies in robotics and AI and these sort of things can give you a sense of predictability in an unpredictable world. And on that note, we're going to wrap up the podcast here. Prerna, Parash, a pleasure having you both on, and a big thank you as always to our listeners for tuning in. Do remember to download and listen to our sister podcast, The Macro Brief, your one-stop shop for the major economic discussions shaping investments around the globe. Under the Banyan Tree is an HSBC Global Investment Research production. We'll be back again next week.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.